Well, it's time now for a check of the top business news stories. Cole Stangler joins me. Hi there, Cole. They're talking about it as Black Monday, a pretty dismal start to the trading week by anybody's standards.
That's right. Black Monday is right. Fears over the coronavirus continuing to weigh on global markets. Wall Street on pace for one of its worst days since the financial crisis of 2008, fueled by a nosedive in oil prices. We'll get to that in a moment. For now, though, let's start with European shares, which were in the red across the board. As you can see, the FTSE in London losing more than 7%, nearing 8%. Now at levels not seen since the Brexit vote in 2016. The CAC 40 and the DAX both shedding around 8%. Shares in Italy down even more than that, more than 11%. Banks among those hardest hit by the sell-off. Wall Street also showing some heavy losses here to get to those U.S. numbers. Trading was actually even temporarily halted shortly after the open, after the so-called circuit breakers designed to cushion losses took effect. Since then, the Dow Jones hasn't been doing much better. The S&P and Dow Jones both losing upwards of 6.5% there. Energy companies among those with the biggest losses there. Oil prices, meanwhile, seeing their biggest one-day drop since the Gulf War. As you can see here, Brent crude losing about 20%. That's down a fifth in one day. Just to give you some perspective there, trading at around $36 a barrel now. Brent crude, the international benchmark. It's after Saudi Arabia slashed prices over the weekend with apparent plans to ramp up production. Move that came after Russia declined to agree to production cuts last week. Saudi authorities now essentially gambling they can dominate in this market with low-cost oil. For more now on the plunge across markets, we're joined by Toby Gibb, Global Head of Investment Directing at Fidelity International. Toby, let's get right to it. Why are we seeing such heavy losses today in markets in both Europe and on Wall Street?
Yeah, I think, well, a lot of it is driven by the big fall that you mentioned in the oil price. So we had the collapse of the OPEC Plus meetings in Vienna over the weekend, with the Russians effectively not willing to agree to production cuts, and the Saudis retaliating by effectively saying they're going to flood the market and reduce prices to customers, particularly in Europe, and that's led to quite a significant fall in the oil price. I think potentially there's further to come. We could see the oil price drop towards the cash production cost of sort of $25-30. So really quite significant impact on the supply side, and as we know, that's coming at the same time when there's a big demand shock. So the coronavirus is having a major impact on demand, whether it's for industry, but also for airlines, given everything that's going on and the cuts in travel. So the supply side and the demand side both very weak for the oil price at the moment.
And when might we expect either of these trends to stop? So both the dramatic drop-off we're seeing right now in equities trading, but also that drop in oil prices that we're seeing.
Yeah, I mean, with the oil price, I think, there could be a little bit further to go down towards the cash cost. I think, it's going to be a little while before we get the Russians and the Saudis back to the negotiating table. Usually, it will be, a course of a few months before that will happen. So, I think that could be certainly volatile for some time to come. But as we know, the sort of the break-even rate for both Saudi Arabia and also for Russia is well north of $50, so it can't stay below that level for too long. On the demand side, there's a huge amount of uncertainty there. I think, as we're seeing over the last few days, it's proving very difficult to sort of curb the spread of the coronavirus, and I think, that is likely to continue. I think, what we're seeing is the market now trying to discount the likely impact of the further spread into Europe and into the US, and the potential for similar sort of a similar situation that we're seeing in northern Italy to impact other parts of Europe and potentially even the US. So the market's starting to discount that, but again, I think there's still some more volatility to come.
Maybe finally here, what can governments and central banks do to help provide support?
Sure, I think we're starting to see central banks providing more liquidity. So the US and Australia and others cut rates last week. We've seen today the US increasing, the US Federal Reserve increasing liquidity. So, that helps from a short-term perspective. But, clearly with interest rates as low as they are across the world, there's, you're sort of slightly pushing on a piece of string. So I think fiscal policy is going to have to take up the slack. To a degree, the sharp fall in the oil prices is something of a fiscal stimulus, but I think we're going to have to see more, particularly in the US and also in Europe, to try and get the consumer spending up again and really to offset the weakness that the coronavirus shock is causing.
Toby Gibb from Fidelity International, thanks for taking the time to walk us through that. And Tom will, of course, be closely following this throughout the evening here. Markets in the U.S. still open and still a lot of uncertainty about how long these losses are going to continue for.
Okay, well, thank you very much indeed for that. Cole Stangler there with today's business news.